Hello, my name is Jack, and today I'm going to be covering Boston Properties, ticker symbol BXP. This company is a part of the office property REIT sector. If you don't know what a REIT is, it is a real estate investment trust. Essentially, it is a company that pools together investors' money and purchases properties, and then the rental income derived from these properties is redistributed back to investors in the form of dividends. REITs are required to pay out 90% of their income after taxes, etc. So yeah, that's the basic definition of a REIT. The office property REIT sector, which Boston Properties is a part of, has been extremely troubled over the past 3 years or so due to the pandemic. Back when that first started, obviously people were working from home, and this created a lot of issues for companies that own these office properties, especially in the major metropolitan areas, which Boston Properties owns a lot of properties in those kind of areas. And also, as of recently, with high interest rates, this creates difficulties for pretty much every single REIT on the market, due to the fact that if you have any sort of adjustable rate debt, that is going to go up, that is going to increase costs for the companies, and also are going to cut margins. You're not going to be making as much money compared to the debt that you have as a company. One of the big reasons that I'm bullish on this company in particular is that the company has a renewed focus on life science tenants and expects 13% of rental income to be derived from these tenants by 2026. For reference, these tenants currently represent around 8% of the company's rental income, so this would be a pretty substantial increase. A lot of office REITs are beginning to transition into focusing on these life science tenants for one big reason. A lot of corporate offices, people that lease from office REITs such as BXP, they don't need people to be going to the office all the time. Whereas life science tenants, people who are focusing on developing new products to expand the healthcare system and improve quality of life for people, they generally need lab space, which means that they have to be going to the office, which means they're going to be on long-term leases and create stability for companies like BXP. Now, a lot of people see life science tenants and are immediately sold on whatever company is trying to incorporate more life science tenants and get them to be leasing from them. I'm not extremely bullish on really any office REITs. I just wanted to touch on this today because I'm thinking about getting into a position in BXP. However, my main concern with even with life science tenants is that not every company who focuses on quote unquote life science is going to be using lab space all the time. They still have to do other corporate office work, paperwork, accounting, all of that kind of stuff, which since the COVID-19 pandemic has largely become transitioned to work from home. Now, I know I just sort of talked down on these life science tenants, but I do think that they are one of the best sort of tenants that you can have as an office REIT. And half of the active development of BXP and their new properties is life science focused, which I think is beneficial and will be good for BXP in the future. In terms of these recent developments that BXP is getting into, over 50% of these assets are pre-leased, meaning people have already committed to being tenants of these BXP office buildings. Another positive sign for BXP is that their GAAP, which is the Generally Accepted Accounting Principles standard, their revenues have grown 6% year over year. This is due to slightly higher occupancy. They've gone from 89.1% to 90% occupancy, which is a positive change. Now, their non-GAAP FFO stands for Funds from Operations. That's generally used for describing revenue in real estate investment trusts. This has declined mainly due to higher interest rates, more expensive financing, things like that. Currently, the company's credit rating is BBB+, which is good, not great. Although the credit rating is on downgrade watch, so we'll see. We'll have to see where that goes for the future. Another positive sign for BXP is that most of their debt is unsecured, meaning that falling commercial real estate prices won't be as negative for them as compared to peers who have lots of secured debt, which can be liquidated if the commercial property's value falls below a certain level. It obviously depends on how the deal is structured, but the fact that BXP, most of their debt is unsecured, is a positive thing. Now, back into negative territory, the company currently has a 3.92 annual yield, which is around 6.7%. which sounds good on paper, but is actually flat since 2022, which is not a good sign. The fact that there's been no dividend growth over this 3-year period is frightening. Dividends should grow hypothetically during inflationary periods if the company is doing really well. So this is a clear indicator that the company has been struggling really ever since the beginning of the pandemic. Now, a positive spin on the dividend is that their payout ratio, which is their dividend per share, the 392 number that I gave you guys earlier, divided by their FFO per share, their funds from operations per share, should be around 55%. This is using the FFO figures are an estimate. Obviously, we know what the dividend is, but the FFO per share might change ever so slightly throughout the year. But it's a pretty good estimate as of right now. So this is considering the FFO per share estimates, obviously. This is a pretty healthy level. So the 80% threshold is generally where we start to consider REITs to be in dangerous territory of having to cut their dividend. And this is 25% below that concerning threshold. So we're in a pretty good spot. Implies the dividend should be safe and even has some room to grow if economic conditions start to improve. All in all, I think there is some value in the BXP stock, a decent dividend yield, and certainly some room to grow in the future if economic conditions start to cool down, if we start to see interest rates falling, if we start to see inflation easing. I think this company could be a good buy, and I think now would be a good entry point as the company's gotten pummeled over the last year or so, down 36%. It is certainly an intriguing company, and I believe it should be on every REIT investor's watch list for the future, even though they are in the troubled office property sector.